Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly, and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Hey everybody, welcome to Laughing Stock. This is Redneck Johnny. Sorry, I'm a bit late. I always am a bit late now because I need to update everything. So apologies for that. I can't do much about it. I'm trying. I have like 6 tabs open with my database, and I try to do everything at the same time without breaking my computer. So apologies for that. I hope Y-Sheets will fix this issue a little bit soon, so it doesn't take so long. But holy shit, look at this. What a red day. What a red day today. And also for the week. The week has actually been pretty bad, I think. For the companies I hold in my portfolio, it hasn't been too bad, but a lot of things are just bleeding red. And I was joking around a little bit in the description that Redneck Johnny is colorblind, so everything is an opportunity for him. But it is though, like things like this gives you some opportunities to check things out and maybe get in on a cheap level, you know, close to the 52-week lows and all that we like to see on the charts. And I don't know if you believe me, but before the stream today, I went through like 100, almost 200 charts quickly, just to see, to screen for the stream. And I've actually found a lot of tickers today. I will be surprised if we can get through all of them. So I'm a bit excited to see what we can find. And there's some charts now that I really like, and I try to add, of course, with our style, with the fundamental. And I think a few things start to look interesting for me down here, but it's a bit tricky, I think, to navigate through this in an earnings period, because I'm waiting for the sentiment on these things to change upwards again a little bit. So I have to wait a little bit longer. And I've also actually thought about it lately, and I apologize because in the weekend stream I said, because I saw it on TradingView, that Alto's Q2 report was after market close yesterday, but it wasn't. So apologies for that. It was wrong information. It's 6th of August. So I'm not going to do a lot on Alto today. I'm going to check it a little bit now. But we have to wait a little bit more for that quarter report from them. But it will come. But what I was going to say is, like, you know, if you have followed the stream now, you know, my cash, I struggled a little bit to build up a cash position, but now I have one, a small one. that I plan to use. But since we are so close to the Alto earnings report now, I have a thought about maybe waiting a little bit to see what happens there, because you know, the last few times on the quarter report for Alto, it has gone, the price has gone down a lot, but my thesis has still been like holding up. You can say incredibly enough. A lot of people disagree with that. But I'm tempted to wait and see if that happens again. Maybe the report is not so bad in my view, but in the market's view, the price might get slammed, you know. And then if I have some cash, I might go into put it into Alto again. So that's just like my rough plan right now. And I don't think it's necessarily bad right now to wait, even because, like I said, I want things to stabilize a little bit after the earnings reports. So maybe in that time there, I wait for Alto, maybe some other opportunities can come up as well. So yeah, that's my rough plan right now, to just wait it out a little bit. But I will add things to the tracker, and if something looks like really good and really cheap, I might just use the cash, because I'm happy with my position in Alto. I'm not happy with my average, but I'm happy with my, you know, my money amount. Hey David, hey, nice to see you back here. Yeah, you're excited for the stream? Really cool to see you back. I love when people come back, like new people, new names that I remember, and that you come back. Yeah, my day investing wise has not been so good, but I had a good day yesterday actually. So if you add them two together, I'm not down so much this week. So in total, it's okay. But in general, my day has been good. It's been very hot here, and I've been outside a little bit, and yeah, you know, done a few things. I have a holiday now, so I have some time. So I just been enjoying. And I will also have time to check this, you know, stock research a little bit more. So I'm happy with that. Yeah, and some of the tickers that I have decided to pull up today, they are from earlier in the week, not necessarily for today either, but actually because I was so delayed because I had to update everything, I haven't pulled up the tickers yet, so I have to just do that while I'm streaming today, and we can go back and forth with dashboard as I do this, but this takes a little bit of time, so I just need to pull up the list of tickers that I have here so we can check it out. We can start with Alto, down 2.5%, which isn't too bad. 155, it's okay before the earnings. I mean, if the earnings disappoint, this can drop lower. Like my last purchase was 130, and I'm a bit worried that if the report is viewed as bad, it can drop below 130 even. Which is my comments about my cash position and me waiting a bit, because you know, if they have some information about some of the other things that I find positive, the Q2 report can be decent for me, in my view. It doesn't need to be crazy good. And I saw Justin commented last time, I think we went through it on the stream on the weekend, that he's trying to prepare the readers, I think, for a little bit, like chill out a little bit with your expectations and look forward to Q3. That should be good, but you know, Q3 was the nightmare earnings period last year, so we just have to wait and see. I think I forgot to ask you, David, how's your day been? And also investing wise, how's your week been? Been a bit of a rough week, up and down, and all kinds of crazy things. Yeah, I was just thinking that I should see if there were some comments here. I see one new comments here on Justin's article. Any degree of faith is gone. That's nice. I'm trying to be positive and tell everyone what I see, and then the first comment is like, all faith is gone. Fuck this stock. We will leave it. Zero positive momentum headed into earnings, fueled by lack of compromise updates from management. A complete show me story, and if they don't execute and provide good column guidance, Alto is headed to 1. That's nothing new though. It's like unnecessary to say that now. I feel like this is like the common sense with Alto right now. It is a show me story. But what I think a lot of people are missing is that management in the past, you can believe it or not, but I've been an owner of Alto since 21, and they have showed the market before that they can do well. So, and I get it, like they have changed out a few of the people and all that, but people were even more negative to the old management. So, and you know, these people were a part of that because it's the same people that they upgraded. So, yeah, I'm not buying into that it's all bad, but of course if they continue to fumble and do bad, I'm going to change my thesis as well, and these guys have been right, and I accept that, but I disagree right now with some of these statements and some of these negative sentiments as well. I'm not as negative as you know. And just saw they are posting like from other companies in the same sector, like on their transcripts and the earnings call, what they say, and it does look good. And I even saw look here. I found this very interesting actually. First of all, this is going to further. This is from Justin. This is going to further increase ethanol demand blending, and is referring to this tweet here. EPA has granted an emergent fuel waiver for the Great Lakes states. And then I saw, where was it? I think it was on his page about the SAF. Here, this one. I found this interesting. And you know, we are a bit early here on this, but United Airlines become first to purchase sustainable aviation fuel at O'Hare, or here, I don't know how you pronounce this. United Airlines said it has become the first airline to purchase sustainable aviation fuel at O'Hare. The Chicago-based airline CEO made the announcement at the airport on Wednesday. The fuel, also known as SAF, is made from renewable or waste materials. The fuel can emit up to 85% less carbon on life cycle basis compared to jet fuel. United said it used more SAF in 2023 than any American airline at airports in California and Europe. Governor J.B. Pritzker was in attendance in the announcement to show his support for the initiative. The Illinois SAF tax credit was signed into law in 2023 to provide framework for the airline to begin purchasing SAF for use at the heart. So it's a start. This will be a big deal for Alto if they can get a portion of this market. So I'm just like, another thing that is potentially good for the company, you know. So yeah. My week is, David, you are saying my week has been good. My investing week has been bad. Lost. Sorry, I didn't mean to laugh. I just laughed because I'm in the same boat. Been bad. Lost quite a bit of money in my Roth, but I'll make it back. Yeah, you will make it back. Just stick with it. Stick with your principles and stick with your strategy. And I think as long as you have done a good job doing research and are continuing to try to learn, I think you will make the right decisions. And for if it helps anything, I'm also down, and I'm since I started, I'm down quite a bit on Alto, for example, which is I've been very open about it. I was too early, and I've tried to average down. So I'm not happy with my average, but I'm happy with my position. Like if it turns, it's gonna turn out great for me. So if that helps you a bit, David, I'm kind of in the same boat, and you know, we have been now also on the stream live. We've been through earnings that sends a ticker that we are in down like 60% in a day, and it's not cool. It's like very painful to see your money just disappear, you know. But both Dane and I have decided to stick with this and try to make it through it and turn it around, like make it work for us, you know. And I hopefully, as you can see on the streams, we're trying all the time to improve and learn and try new things and stuff like that. I have to give a lot of credit to Dane now with him testing out a few different things with this more like a technical analysis side of our style, because as you have if you have followed the stream for quite some time now, you know my sorry, there was a flyer, you know, my I've been complaining a bit about I'm restricted on my cash position, and it's been hard for me to build up a cash position, which has limited me also in my efforts to test things out with actual money. But I'm very you know, Dane and I talk a lot, and we are brainstorming ideas, and he's like reporting back his findings and what he sees, and we are trying to brainstorm. Like I'm telling him what I see on the charts, and we are giving each other like heads up on tickers to see, to discuss, you know, if we are agree with things. So I think that's the way to do it. Just try to add on things and improve, and at least my view of this is that this can work and potentially be life-changing for the positive, you know. David, sounds like a roller coaster buckle up, boys. Yeah, it has been. Okay, I'm way too slow here. So the other one was Mastercraft, and keep in mind, no, Mastercraft had a 5% day up yesterday. So in the last 2 days, this is not too shabby, to be honest. And it was actually down 10% earlier today, so it got up a bit. And I think this was just, from what I could tell, this was just like because of a more negative sentiment towards the macro environment again. And usually then you don't need to believe what I say, but usually what I've seen in Mastercraft so far is that when you have these rough days where the market turns a little bit and all the indices are down and stuff like that, you get an up day close to the one that was down in Mastercraft when things change a little bit, and maybe some government people come out and make the picture a little bit more pretty, and then things turns a little bit. But I'm not worried. Like, this is a longer term hold for me, not like a Buffett style hold, but a little bit of a longer term. And we can check if Coliseum has done something. No, they are happy still with the position. And I just checked the volume. Look at the volume here. It's below the average volume today. So that is down 7% on that half. I'm not too worried about that today. And I think my position is up like between 17 and 20% on it in just a month. So I'm pretty happy with everything in Mastercraft. And yesterday was a little bit more volume, and that's when it went up almost to 22 bucks. Imagine, was it below 18 a month ago? So look at this, 17. A whole week it was trading below 18 bucks. And I was surprised I didn't see Coliseum buy more there. But I have to give them a lot of credit. They have bought below 20, so I think they have nailed this so far. bought below 20. So, and I saw in APPN there was also heavy insider buying, but they have been wrong so far. And like we talked about how you can start to track these funds also that buy big positions. And in my experience with Mastercraft, Colosseum seems to be a fund that I'm gonna like. I remember that name now. For the future, when I see them again, I can like trust that these are people that know what they are doing. And in APPN, I'm not sure if I have them today. No, I think Dane talked about them on Tuesday anyways, but there was a big fund that has been not like super wrong, but they have some big purchases, a lot higher than the current share price. And that stock was down heavy today on earnings report. So, you know, maybe that's a bit the opposite. And I don't know that fund either, but maybe you pay attention to the name and okay, maybe they got it wrong there, and that's just something you keep in mind and take with you in your future research. I think to track funds and also activist investor and individual investors is very important, and also analysts and on Seeking Alpha. Everything plays a part when you do this. So and also that's my view of it, and that's what I'm doing. And I had a similar experience about a year ago, a little bit more than a year, in NMBR. I bought at $1.04, and it was a big fund, Core Partners, who was buying and buying, and it turned out to be a great purchase for everyone at those levels. And I sold too early. I got a double. I got a quick double. It was, I don't remember, 3 weeks or something, and it doubled. But it went up to, it went from $1 to $5, and it still is around between $3 and $4. So I sold way too early, but I was happy. My target was always like $2 there, and I got a clean 100% on it. So I just took it and actually diversified. I was very happy about it, and bought GTE, which was also a big, good purchase. But I did some mistakes and sold too early on it because of being. I'm not going to go into that. I've covered it before, but because of raising cash for my BNED position, which went to hell. So that was mistakes, but I mean the picks were good. At least, so I was happy with the picks, and in NMBR the point was the Core Partners Fund. That's also a name that I was not familiar with before, and now they prove themselves like they knew what they were doing, because they got in at very low levels with a lot of money, and I'm not even sure. I haven't checked if they've sold even their position, but. They did a great job there. So to track these things is important as well. Look, I told you there's too many tickers, if that's a thing. I don't think we will get through all the tickers today, but we can try. And I think the ones I can't get through, we can try to do them on the weekend. And by the way, on the weekend we will stream on Sunday this week. I think Dane was busy on Saturday, so we will stream on Sunday, and I will send out a tweet with the time. So if you don't follow us on X or Twitter, make sure to follow us there so you get the updates and everything like that. And I apologize for spending so much time pulling up these tickers, but there was a lot of, like I told you, almost 200 tickers. You don't believe me? We can check the movers. Look at this. Look at this shit. It ended at 169 that traded 20% from the 52-week lows. And when I pulled it up, it was like 180 something, 1 hour earlier than the stream started. So, so there was a lot of things to cover today. And I'm just happy about it because this is great to find new stuff, and maybe I can add some stuff to the tracker. And I really like the new screening method now. Like I start with the charts, and then if I like the chart, I go back and I check the market cap, I check the industry. And that's another thing. I think I'm leaning towards like blocking out medical things and these you know, healthcare companies, because I'm just not interested. I've said this a number of times, and I think I will just end up blocking them out again, because then I can't watch 200 charts every day. So I need to slim it down a little bit. And they tend to fill up a little bit on the charts, like my list. So I'm thinking to block them out just because of that as well. So that's moving forward. But I look at the industry, I look at the market cap, and then finally I check if they are US based, because I get a lot of like foreign companies now as well, and I can't trust my numbers on them, so I just block them out. And then finally I check if the metrics are good, and if all those things are good, I go and check the fundamentals. So that's why I have a lot of tickers today. We're soon done here. I have one more after this, and we can go straight into the fundamentals. I couldn't even pull up the tracker, like from the list from tracker, because I didn't have time to. And let me know, by the way, if you have any more tickers to throw my way in the chat. And by the way, I have to admit, Value Hunter and also Dave now actually, and myself, we're playing chess, and Value Hunter is currently leading over me 1-0. So I'm not gonna try to talk myself out of losing to him. I even gave up. But don't tell him that I said anything if he comes on the stream, please. I'm not in the mood. I'm not in the mood to take any. I blundered my queen and my rook, and then I just gave up. It was terrible. But I have a rematch with him currently. Actually, you want us to play chess on the stream? I can play chess instead of doing the fundamentals with Value. All right, we are finished. Whoops. Then we can start here with the dash. Look at the dashboard. Bleeding red. This is actually one of the companies I have pulled up today. Goodyear. Terrible earnings, down almost 16%. Look at this in the risk column. Almost everything is red, and you don't see that too often in like normal times. And I can guess then you can argue that we are not in normal times now, but a lot of days you never see this, you know. And I hope we don't get like a period now where you see a lot of red days. But it can happen, of course. I saw some talks about like Fed should come out a little bit earlier and talk about the rate cuts and stuff like that. But at the same time, just look here. I'm just going to pull up something from Yahoo that I saw. Like it's not just bad things. If I can find it again, I saw some stuff from UK. Can't find it again then. But the to sum it up, like it was more positive over in UK, you know. So I'm thinking like if you know, you can't compare like countries and stuff like that maybe, but the UK is also not a small country in the world, and everything has an effect on everything. So nah, yeah, I'm still, like I said, I look at this as an opportunity, and in saying that, there's also laying like I'm thinking the near term also outlook will be a bit more positive. I hope so. David is saying, can you check out MindMed, MNMD? Not sure they would qualify as value, but they certainly have my eye. They are participating in a revolution in medicine by using psychedelics as medicine. I think this could be a multi-bagger company in a huge new space. Yeah, I can, David. I will pull them up now so we can do them while I have them, but I can't promise. Well, I can start with it. I will start with this one. What I will say though is usually, like I just said, I'm not too keen on these healthcare companies personally, but it doesn't mean that I don't see value there. It doesn't mean that I'm never gonna do them. It's just more than, in my experience, they can drop and also get crazy gains in a short amount of times, which you can argue like everything can, but I feel like in healthcare this happens a little bit more often. And right now, for my style, I'm not willing to like spend a lot of time on these. But sure, we can start with them, and also let me know what you are seeing in them in terms of fundamentals and stuff like that. And if I say something wrong or something like that in your mind, correct me, and we can talk about it. Look at this. I don't think I've pulled up all these this many tickers before on the stream. Off the stream, I do it all the time. Usually I have at least one of these columns full here. Okay, so this is MNMD. First of all, David, they are from Canada, which messes up my numbers. So straight away here, you can see they have very little in revenue. Maybe that's accurate or not, I'm not sure. And that's straight off, it like puts me off a bit, you know what I mean? I'm struggling a little bit to trust my numbers here. They certainly are subject to close regulatory scrutiny, okay? So psychedelics, what do you mean, like, is it THC, or is that what you call them? So I'm just gonna check if my numbers here are a little bit, 252 in cash, no, yeah, cash. Well, that was accurate. Well, some of these numbers seems to be accurate at least. So, and what was the revenue? Well, like I said, Canada strikes again. Yeah, yeah. I've heard. I've never been to Canada. I'm sure it's it looks like a beautiful country. I want to go to one of those cabins and have a fishing trip, or like you're just hiking and stuff like that. It looks very beautiful. But I know a lot of people are talking about the government and regulations and all that stuff, and that they're not happy with that. I think that goes for a lot of countries these days, though. I feel like that's accurate. First off, here, David, I'm seeing like but I know what you said though. It's future potential, and if they get this right, you can see an upside here. But just looking at fundamentals, I see like these negative cash generations. It's not something I like. I think they have very little in revenue if this is accurate, and I'm not a fan of this big share dilution over this time. Look at this. And they also have taken on some debt here now recently. I also noticed though 34% in short interest, which is quite high. It's very high actually. So that plays a factor. Maybe it's justified, but that's a lot of short interest. I just want to check. I have to lean a little bit on Seeking Alpha when I have so much limited data. And they were down 9.5% today. And you see, I think this is because it's Canadian. There's a few things that I'm not showing up in my sheet. So where were we? Seeking Alpha. MDMA setbacks. Still hope in light of different factors. So it was on a podcast here that I've listened to in the past. So I guess there's some obviously there's some interest when it's 34 short interest here. So is this, yeah, this is the same, right? He had a strong buy and is up 13% since he wrote it, so. This is what I don't like with these types of companies though, David, that there's a lot of trials and stuff like that, and if just one of them stops or fails, it's the price plummets, and it's a little bit like everything stands and falls on one thing, you know what I mean? And that's kind of what I don't like. But then you can say the opposite also. If it succeeds, like you said, it's a multi-bagger probably, you know. So, but I'm just not, for my style, this is not something I'm comfortable with right now. The backup candidate. But if even if they have a backup plan here, if the first one fails, you will notice it in the share price. But Dane said something interesting though, in terms of healthcare companies. Like when you see insider buys in these ones, you should pay attention, and you don't. You just see sales here on these ones. I don't know what's going on. You know, they're saying like people can sell for a ton of reasons, but they only buy for one. It is true, but of course I would prefer to see some buys. That would be good. So yeah, David, I don't know. Maybe you can say something more if you think I'm overlooking something or taking this a little bit too easy. And I'm trying to explain like why I do that. This is not kind of my type. What I can say though to that I like is like this cash position. Look at this. They have 252 million and the market cap is 604. So that's a lot of cash compared to like what the entire company is worth, and they show up as safe in my sheet, so they should be good with the debt and all that, but they are still not generating any cash though, so that's a big problem. And I'm not like, if this revenue thing is accurate, this is not very impressive, you know. But again, I understand that you are looking into the future, and if they get it right, the numbers will look way better. I expect them to. They trade above book value right now, and look at the earnings. They've consistently a negative earnings, so not exactly performing well. So in that regard, I can kind of understand the short position here. You know, 34%. I wouldn't. They will be screwed if. All those if this succeeds, of course, but right now, if you just look at this, and without me understanding like the future of this company and the direction, and I would have to read through the press releases and all that, and I don't think I should do that just because of the fact that I'm a bit careful with these healthcare companies. All that said, like I can understand the shorts right now, you know, in this company. How has the margins done anything? And that's another thing. I don't have enough numbers, you know. The costs are up. They are diluting. I don't like that. Like this is pretty heavy dilution. So the only thing I kind of like is the cash position they have here, which is strong. And they can do a lot of things to that, but I'm not sure how much cash they usually burn even. Did we see that? This is probably from the dilution and the share offering or something. I'm not sure, I'm just assuming. Like 10 million shares. So it's trading above book value, a good or a bad thing? It depends on how you look at this. And again, I'm not sure how you should read it in medical companies because I don't do them so much like in biotechs. But in the companies I usually deal in, I prefer, I see it as a strong sign if they trade below book value. And that just basically mean like if the company sells everything they have, like if they use the cash they have on the books and they sell all their assets and the share price is below that, it means like if they sell everything, they should be worth a little bit more than the current share price, you know. So if it trades above that, it's the opposite. Like you could say it's like a bit expensive compared to what they have on the books. However, it's not that simple, you know. You need to take other things into consideration. So it's just one thing. That's why we have this sheet. It's just one thing to look at. What I'm using book value for more though is to see the growth or the decline in it, and that's where the conditional formatting helps a lot in these sheets. And here you can see it has actually declined a bit since 21 for this company. Then they had 723, but also they had few shares though. But I have some calculations, so it takes everything into considerations, right? So this is a bit up and down, and now it's a bit up again, and I assume it's just because they have more cash on the books. So that's how I read into the book value thing, David. But I'm not sure what that means for a biotech company though. I'm assuming there's a lot of patents and stuff like that also involved here, that it's hard to put a price on a lot of things that companies own, like technologies, algorithms, you know, brands, names, patents, licenses. It's a bit hard to value this correctly, and instead of if they own like a factory or you know, equipment, it's a little bit more easy to value them and value them correct, which is like the assets of the company, you know. Thanks, the dilution in this space is ridiculous. You should see Sybin, SYBN. Have they diluted even more? But saying that though, this is not like anything crazy in this company, but I just don't like to see it because they do it every year. Look, they've diluted the shareholders every year. And if I saw correctly here on the here they have stock-based compensations as well. So they issue shares to the insiders, which in some cases can be good, like a motivation to do well and stuff like that. But you should monitor this a bit. If it's too high and the company doesn't deliver, it's not a good sign, you know. Yeah, they have just be careful. But saying that though, David, right now they have a lot of cash, and they don't have debt. So if you want to go further with your investigations here, I think you should look at what they are usually spending the cash for, and if they have said something about in some quarterly filing or press releases what they plan to use the cash for, and then try to determine how much cash they're going to burn in a short time, and if they have to dilute even more in 2-3 years time, you know, or if they have right now they have enough cash to do a lot of things that, you know, the cash position can give the company a lot of opportunities and flexibility. So read into like what management has said about that. I think that's a smart way to do it here, in terms of trying to figure out if they're going to dilute more in the future. But since they have also this stock-based comp, it's not too, let's see, it's a bit high, but maybe I'm not sure how to read into this, to be honest, in biotechs. I'm not sure what's normal. Just, yeah, be a bit careful for that then. I think I will move on now, David, if it's okay. Let me know if I missed something, or if you felt like I took some points and made them too easy or something like that. But the cash position is the one strong thing I see. Plus that they have control of the debt, and actually they have very little, almost nothing in debt. So they should be good, you know, in terms of that. 100%. Okay, thanks so much for checking them out. It means a lot to me. I will keep following them using your guide. Yeah, but please remember though, David, that nothing on this channel is investing advice or something like that. It's just to get a conversation, and this is what I see. Trust me, I've been wrong multiple times. I'm an idiot. Go back and watch the streams with Bean. We ended up being a lot of, we said a lot of right things about Bean, but we timed it wrong, so I lost money there. So please, to everyone, this is not investment advice. It's just my thoughts, and I've been a lot wrong in the past. All right, I'm moving into the huge list we have here, starting with SILC. This is one of the ones I found earlier in the week. I'm not sure what's going on now. Let me just check here if this is. This is a bit weird. My sheet isn't working properly, but it's all good. Just annoyed. Mismatch range sizes, expected row count. Seems to be a mistake somewhere in my sheet. So then that means probably that you won't see any of these numbers, but they are not so important in today's stream. I think we can find them elsewhere anyways. But I'm just a bit curious to, let me check if I update here. Wow, now they are back. Let me check MNMD then. Oh yeah, so it's working. I don't know what happened. This is what you have when you don't have access to a Bloomberg terminal or anything like that. You have to rely on these things. Another thing then, just before I move on, David, is like the high inside ownership here is pretty high actually, 16.52%. If that is accurate, sometimes I go in and double check. You can do that in these SECD filings. You go in here, and you can just type in beneficial ownership, and you just scroll down to this table, and you can see my number is a bit misleading in that way. This is reporting like named executive officers and directors. They only own 2.26%, but I assume they have added in these two ones in my number, which then makes it a bit high here, so discount this then when I just said it was good. If this was more accurate, that would be a good sign also for this company. But since it was a bit wrong, you can discount it. So SILC Silicom, it's a technology company, a little bit tiny market cap, 78 million. They trade now at 13%. They were down a little bit today, and you see here, like I just said, the inside ownership almost 10%. We can check that later if it's true. But here, David, you can see an example of something that trades below book value. Because in their reportings, they have 22, almost 23 bucks in book value. And also, look at the capex. They pay 0 in capex. I have to check if that is right, because I don't see that very often. But that means that what they earn in operating cash flow also is what they earn in free cash flow. And this one actually comes up in my sheet as a Graham net, which means like if they sell the entire business now, you will earn money. it will be higher than the current share price. Sorry to explain these things in my second language is a bit tricky, but I hope you understand. And feel free to ask questions if there's something that I can't explain properly. But they have a lower number here in the price, you can see, David, so then the book value. So that's, something I look at. Having said that, though, a technology company probably have on the books like a lot of I'm not sure about this exact company, but usually they have a lot of like software and stuff like that, which again is a bit hard to value. So that's something to keep in mind of. Oh, they are based in Israel. That's why, once again, and I can't trust these numbers. Like usually I don't trust these numbers well enough when it's a foreign company. So I'm just gonna, and I see now that I've done this is probably come in my list on a little bit of a mistake, because this looks very good and might be, but I'm not gonna sit here and trust my numbers, and then I don't feel comfortable spending more time on it on the stream actually. But if you like the ticker and what you see, you can dive in yourself. But moving on then to GEOS. Which is an energy company in oil and gas equipment and services. And this is also previously in the week, and they had a good day yesterday, or they were up 5% or something. And then now down to 2.5 almost. They trade at $9 roughly, book value 10, so they are below book value. They also have a cash position, 50 million in excess cash, which is good. Revenue is actually up here, which I kind of like, and the share count is pretty stable. Look, all these years around 12 to 40 million, and now actually down since 2020 to 13 million from 14. They are generating positive operating cash flow at $1, negative free cash flow though. So but then you have to look at this trend over the last 3 years. If you just look at these numbers, it's going upwards, right? So that means that this company can maybe they have turned a little bit around and are now in the future going to have positive free cash flow, which is a big thing that I like to look at. First year in a long time for them, they have positive earnings, but they have sold some assets though. So you can see. I should probably dive in and check what that is. They have no debt, so I'm not sure. You don't need to worry about any debt here. A little bit higher in capex than what they are usually having here, but you see they have every now and then they have these years or time periods where they have a lot in capex and then it slows down again. But yeah, you can also see that revenue is usually high when the capex is high here. So something to keep in mind, I think. So I like a lot of things here. I like that it looks like it's turning around a bit. I like that they have no debt. I like that they trade below book value. I like that they have control on the share count. Opposite to MNMD, these people have not diluted, so it seems like a well-managed company, even though it has decreased in a little bit on size on book value, and you know, they have struggled. If you look at these shares, maybe you can argue they have struggled a bit, you know, but it's maybe we need to check more here, but maybe this is turning around a little bit now in the last year, and this is just an opportunity. I want to, yeah, look here. You can, it's reflected in the numbers up in my sheet here, you know, the margins are up. So, and the costs are down actually. So all these are things that I love to see. They are not paying a dividend, which is also something that I like. So next thing, there's no inside buys though. Let's check what is going on here. There was a lot of inside buys at 22, 23 at 5, yeah, around $5. So that guy nailed it. He's doubled his money almost. So this is the director, which means if you see him buy now, that can be a trigger to maybe copy him, you know. Let's check the chart, because this is right now trading 20% from 52-week low. Oh, value, welcome value. I just talked. I'm not sure if I'm going to comment more about it, value, but I just informed the stream how I lost against you in chess, and that I simply gave up. So just so you know. But we're doing the rematch. I'm gonna get my revenge. All right, back to here and the chart. There was a big volume here, and you see now earnings is coming up for them. Had a rough week actually here, but slowly creeping up though in price. And then let's see on earnings. You can see these big drops in the previous earnings actually. A lot of the times here they have missed in the past. Now look here, big drop here, or both are on earnings. So you know, going in now straight before earnings could be risky. But saying that though, if they do drop and you see that guy, the director, then jump in and buy some shares, that's a good indicator for, maybe to take a position, because I have to say I like the fundamentals here. I just want to see if their guidance on the free cash flow, if how they think it looks here. Also, this guy has a hold, and the article is from May. And what was the price then? So it's down 8% since then. Oh, he has followed it. This guy writes a lot of the companies that I'm checking. And I don't know his analysis well enough to say anything, but what I tend to see is that he has followed the companies that he writes on for a long time. And then I think it's very beneficial to see like how it has performed with his ratings in the past. So he has a lot of hold ratings, and here he had a buy one, so we can check them out. He hold and 50% up almost, and here he had a buy rating, and then down 30% from there. So, and then he has been a bit careful now again, you know. In rereading your report, I have one clarification, correction, and one question. First, on cash flow. You said cash flow from operation remained negative and deteriorated from the prior year. That's opposite to what I saw. While it is correct that cash flow from operation for the first 6 months of 2024 is negative, that misses the 30 million proceeds from the sale of rental equipment. The way GEOS reports their cash flow, they subtract the gross profit from the sale of rental equipment from their operation. So he's just correcting something. Second, you said recently some government agencies voiced concern over the company's content products, particularly in border patrol and its capabilities. Can you please provide source for these voice concerns? These negative comments did not come up in the company's quarter call. Thank you. So he's just explaining how he does his calculations. There's a little bit of disagreement in how to read some quotes from the call. So you will have to make up your own mind here, right? And go in and read it. But I just registered that there's a little bit of disagreement here. This guy agrees with him. And he thinks this is a steal at these prices. I want to add them in my tracker. I'm just going to check a quick thing now. But I'm not gonna, and this could be a mistake, but I'm a bit hesitant to go in straight before earnings. And you saw on the chart how it had performed on the last 2 earnings. That doesn't mean they're gonna do it again, but just something to keep in mind. All right, I didn't see a lot of owners that I'm like that is noteworthy. So value looking forward to the rematch. Good. Did you both see Dexcom drop? No, we haven't seen a big drop in market cap. No, I haven't seen Dexcom, but a lot of like I started stream by looking at dashboard. It was ugly. Dexcom. What is the ticker there? I'm gonna find it. Are you involved in Dexcom value? Is this the right one? Oh. Dex. Looked interesting. Oh, so this is the right one. You mean this drop then? Wow, that's a heavy drop. Look at look at this chart. It's a cliff. Big company. Yeah, I saw the market cap almost 30 billion. Big company, good margins and good growth percentage year over year. I think the reason that since I don't live in this, I assume this is from the States. There's a lot of companies that I've heard of. Yeah, but there's also probably a lot of companies that a lot of people have heard of that I'm not familiar with it because I don't live over there and I don't, pay too much attention to everything around there, but also this is like in general a bit high steep market cap for me. But I can understand now that it maybe has gotten more interesting when you have one of these big solid companies dropping this much. Then and you know, it's on a down day it's up almost 4%. Are you planning to take a position value? I don't think I can pull them up today. I have so many tickers. And also the market cap is a bit steep for me. But GEOS, I'm gonna add them to my tracker. I don't have them from before, right? No. I think this has potential to drop a little bit though in the near future here. I think maybe if it goes down to like 870 around there, it would be even more interesting to me. Yeah, around 870. I would put in my tracker here like 880, just because my conditional formatting will kick in and you know, catch my attention. I'm just gonna write a little bit of what I've talked about. I'm just putting in because this was the one with the director, right? Yeah. So I'm just putting like fundamentals are good but not excellent. They do trade below book. They are generating free operating cash flow and have now it can seem like they are turning around to operating to generate free cash flow as well, but they are not there yet. So that's just what I've wrote. I'm gonna include. They have no debt and 55 million cash position. Yeah, I'm gonna save it there. Yeah, so all good. On to the next, which is BYON, BYON. Value is saying I don't think so. I have my cash allocated elsewhere at the moment. Better opportunities in small cap. I agree with that. Usually I don't deal in these massive big companies, to be honest. But it's you know, Burry. I love Burry. He doesn't give a shit about things like that. He just says like if value can be found anywhere, and he's right. I just have followed more Roaring Kitty's style that makes a lot of sense to me, and he also didn't deal in market caps, which was too high, you know. But he has also changed. Look at his position now in GameStop. But saying that though, that's a company we followed for a long time, and he went in when the market cap was way below where it is now, so it's a bit of a different play, you know. So BYON, consumer cyclical, specialty retail, operate as an online retailer of furniture, home furnishing products in the United States and Canada. The company offers furniture, bedding, bath, patio outdoors, yeah, so stuff for the home. Look, has been some inside buys here, which is always good to see. Oh, Marcus Lemonis. Oh, wait, hold on. Is this this is Bed Bath and Beyond, right? Yeah, it is. This is like the... No, it is, because I know he took all, he bought a lot, yeah. Oh. Oh. Well, I think it is, right? I'm not sure about that. Just Marcus Lemonis. He had a TV show that I paid attention to. He seems to know what he's doing, you know. He was also an owner in Camping World, right? And had very good success with that. But he tends to buy a lot of shares in the companies he's involved in. And look, he even bought at $27, and now it's at 13. Even 10. So these have all not been. He actually is losing money on all of them right now. Probably going to be a good purchase for the future. But yeah, look at this column. Rough year for them. But I'm a bit put off if this is Bed Bath and Beyond. No, Overstock. This is Overstock. I knew yeah, of course, because OSTK here. There's something in my back of my mind now that I start to remember this. And I think, is it Rod that is involved here? Rod Alsman? Or is it Kingdom on Seeking? Someone that I know have been following these. I'm sure it's Rod. Which was if you don't know Rod Alsman, he was involved in GameStop as well. But it doesn't matter so much. I'm just trying to put together how this was again. Anyways, 1065. They trade above book value. Look at this cash generation here, awful. The last year, 10% short interest, which could be justified in terms of that. Terrible earnings. No debt though. So they show up as safe. Sheet is not diluting them. Almost 200 million cash, which is good. And Marcus Lemonis, he knows what he's doing in terms of turning things around and stuff like that. So you could bet on him as well, you know. What is going on today? A lot of big owners. They do trade at 3% to the 52-week low, so they are... they could be cheap here, you know. They've actually had their earnings, and that's why it's keep on dropping. And it looks like maybe the sentiment is turning around a little bit. So on a technical side, this is a bit interesting, but it's in a clear downtrend, right? If you zoom out here and ignore these part during COVID, but you know, since maybe here then it's clearly, but you get these spikes though. It's not the biggest upside, but I mean, it looks a bit scary on the chart here, but I'm not sure. I'm not a fan of these fundamentals in terms of my strategy right now. So I might think I just will leave them, but I do like the chart, so I'm gonna. And you know, I always add them to my database here, which is a different one than my tracker. So it comes up in my movers if I have done research on them in the past 3 months. So I'm going to make a mental note on the ticker, and if I see it keeps dropping, it might be a bit more interesting. And even I'm going to pull up the charts just to see if things start to change a little bit, you know. David, gotta head on out. Peace, y'all. I will catch you on next stream. Yeah, nice. Thanks for tuning in, David. Really appreciate you watching and also using the chat. So looking forward to see you again on the next one. And enjoy the rest of your day and week then. Now I'm gonna move on here, I think, to Big 5, which is a familiar ticker. I'm not sure. I don't think I have it in the tracker. But I know I've done research on them many times actually, but I'm not sure if it has ever qualified to the tracker. No, it hasn't. So share count pretty steady. They do come up as 11 here. They have some depth, 287. It's not gone down even so much for last year and also in the near term, so we need to check out the depth here. But straight off the bat though, 181 is the share price, and they have generated 137 in operating cash flow and $1 in free cash flow, so that's good. But I know, look at this drop and tiny market cap, and I know this shop is, this company is struggling. Like look at this very ugly downtrend, right, for a long time period. But from 23 to 24, the numbers are up a bit, but earnings is down though. 12% short interest. What are the margins? They have dropped. So this is like legit could go. This is a new 52-week low also. Legit could be bankruptcy candidate, this one. Look at the book value though. And they still pay the dividend? What is going on here? Getting worse, yeah. They need to close a huge percentage of stores. This guy is bullish. I haven't seen him before, so I don't know anything about him. And that's the thing, that they need to do something, but I'm surprised I saw this dividend. What are they talking about here? He has a sell and it's down. He was spot on this one. And the outlook is bad, poor from management side as well, and I never liked that. But it's something to keep an eye on, because if it continues to drop and then you get some positive news, you can time it pretty well with your entrance. But when we are reaching this type of market cap and the outlook is still terrible and they have this kind of depth, it looks ugly, right? It looks dangerous for actual bankruptcy. With potential buybacks and dividends being the saving grace for this investment. That makes no sense. They have cut the dividend though, substantially too. But I mean, if it's a legit risk of bankruptcy, they have to do something at some point. But he said, like, I know the name and I'm familiar with it, but I don't know how big they are in the States. He said it was a well-known name in the West. So maybe he expect them to be I don't know. He said he didn't expect them to go to zero. Most interesting part is that there wasn't a single analysis present for the questions and answer portion. I've seen them go from 2 analysts to 1 analyst now to 0. So they are losing interest in it as well. The community. BlackRock's sold a big portion. Morgan Stanley too. Charles Schwab. Yeah, in my sheet I just found that the debt was a bit heavy, but maybe they have like ways to get around it. They have very little cash. A lot is leases, stores, but also in which they can, you know, get rid of fairly easy. But if they also need to close a lot of these stores, what is it going to do with the numbers here? You need like a solid plan and strategy to get this turned around, and I haven't dived down deep enough to see if they actually have that in place. And like the comments I just read was negative towards management. But the debt is probably lower then, because there's a lot of leases. Nu kommer det no long-term revolving credit outstanding. Well, maybe the debt is just leases then. And that helps. That helps a lot. And, you know, these cash numbers are not bad. But they have to, like, this will get ugly. I think this can get even more ugly than what it is right now before it potentially turn. Yeah. People are a bit like not disagreeing, but they have very two. There are two camps here. You know, one that believes they are undervalued, and one that believes it's too risky at these levels. But I mean, I'm kind of tempted to pay attention to these ones a bit more. This earnings was today. But ugly downtrend, right? Over a long period of time too. So at some point something has changed, or this is not going to work out. So very risky. I'm not saying that I will buy it or anything like that, but it's not in my tracker, so I will add it. As for a price target, let's check here. It's hard because it's broken down below 52-week average. The thing I'm just thinking is that it can continue to drop. It's still 12% short interest too. A little bit up in aftermarket. Heavy volume today compared to what's normal. How is that traded the last days here? Oh, hey Max. Nice to see you back, Max. Great to have you in the chat again. Been a little bit of a long time. I saw you commented on one of the videos. So, how's it going, Max? Oh, yesterday was heavy volume on this. Not heavy. I exaggerate a bit, but compared to the average, this was a lot. Well, they're going to be in my tracker. I think, what can I say? Like, this is... Let me check the fundamentals. It's 181 now. I'm just going to put one... I'm just going to put something just... Because I think it can drop more. It would be... I mean, for me, it's a little bit already interesting here. I'll put 160. I'm just writing like some of the fundamental numbers looks good, and that the leases on the depth chart looks ugly, been a downtrend for years, and they might have to close a lot of the stores, which will what will then the fundamentals numbers be, you know? They've cut some dividend, but they still pay it, and they also seemingly have a share repurchase program in place. I didn't check that, but according to the article, they did. So this can go lower if they have to close stores and stuff like that. It's a bit hard to say where a good entry is, and I guess like some of the people in the article can justify entry here, but I personally think it can drop even more. But it's just something I'm going to track. Yeah. I think it's going to be interesting to follow this company, I think. Looks ugly though. All right, next one. VET. Hey Max, yes, I tried to keep up with watching streams. Nice. Love to hear it. So much to yeah, same here. Even if I have a holiday, there's a lot of things to do, right? Think about Alto if it drops further. I'm not gonna disagree. However, it depends on what they show us in the Q2 earnings, 6th of August. If it's like disappointing numbers and still like just nothing, I'm starting to be a bit worried. However, I don't think it will be. And also, however, if they can get past this one, I'm willing to wait till Q3 earnings to really see, like, that's kind of the last one where they have to impress me before I kind of have to rethink my thesis there. But I'm not gonna I started stream with saying like I have a little bit of cash now, and I kind of have started to think that I should wait putting it into play to see what happens in the Q2 report with Alto. So that's just how I think about it right now, Max. So I'm not going to disagree with that take. Okay, so VET, Canada company. So for some reason Google Finance doesn't find the chart, but I can still find it. How can I still find it? Let me think. Yeah. Oh, they are from the. All right. Anyways, they are from the. I don't know. I thought they should be in the movers. Dropped out because I checked like an hour before the stream. They probably dropped out of. What's the move today? They should be in here. Am I just blind? No, they're not here. Anyways, who gives a shit? They are in my fundamental sheets. We're gonna do them. So they trade at $10 and the book value is 18.5. Great operating cash flow and free cash flow. They've started to pay a little bit more in dividend. Terrible earnings though compared to last year, but also in terms of last year, the cash generation is way down. So is revenue. They have bought back some shares though. But straight off the bat, and debt is like around 1 billion, near term 0. And they have 234 in cash. Margins are down, but also this seemed to be an exceptional good year for them. So maybe you can't compare it to. This is the best year they've ever had, you know. So maybe you can't really compare to that. Cost is a little bit down, which is good to see. They made an acquisition last year, so they took probably advantage of that good year to purchase something then. And they didn't take on debt. They've also paid a lot of the debt back actually. So maybe it seems like a well-run company. And why are they trading so low? A bad earnings report, it looks like. All right. This does looks a little bit interesting on the chart. Did they say anything on like future guidance? I like the fundamentals, even if it's down a little bit. Let's check the comments here on, this was from yesterday? This was from today. They bought back 6 million shares this year. 157 outstanding. Oh, so my number is not even updated. They bought back even more. They could do the share buyback for the next 10 years and still have almost 100 million shares outstanding. At what point did they start paying shareholders instead of buy? Okay, so he's not happy with that. Yeah, I don't know. But some of these comments are brutal. I do like this one. Oh, they're Canadian. That's the thing. There's a lot of the resources that I'm usually use that I don't have access to in the same like easy and quick way that I have with a lot of the US companies. Earnings are terrible low. And they were saying like, I was gonna check if they had some, where's the transcript? If they had some guidance. So they're keeping the guidance where they had it. And even put it up on annual production. I kind of like this one. I'm gonna add it. Yeah, I was gonna say like 983 would be a good enter. I'm gonna put like chart looks good. I just put in like I didn't have access to the depth to check that what it was, but I said the fundamentals looks pretty good, but a little bit down compared to last year, which maybe is a bit unfair to compare them against. And then that I like the chart at these levels even. Oh no, I have them from before. They are in the tracker from before. Okay, I have to go back and delete them. I will delete the one I put in now. And stick with my other comment and I will read it, but now I erased it, but I can fix it. So, but I will do that off stream. I'm so stupid sometimes. I should have searched for them before. I knew I recognized the ticker. But I liked them back then too, then, and have probably, now I erased everything here, but I probably waited for them to drop a bit more, and now they have, so yeah, that's why I said I like them here actually. So everything I just said, I feel like that, but it's going to be interesting to see what I wrote in the past. But okay, then I will just move on. And WW, I know I have them in trackers. I'm not going to do the same mistake there. It's going to be interesting to see what I wrote in the past. So this is Weight Watchers, which has been on a downtrend for a long time actually. 17% down today, so probably on earnings, right? So it looks like a ski jump. Got a little bit of momentum back here. Went from 350 to 13. That's a big gain, you know, but then straight back down again. And this is the one Oprah is involved or has been involved in, right? They gain, you know. They have Oprah Winfrey, yeah. They have struggled for a long time. They are in my tracker. I don't like the fundamentals at all. I'm kind of like not too interesting. The reason I pull them in today is because of the chart. They are starting to look a little bit more interesting after this drop now at 17% today. But again, it's a bit tricky to navigate when you have this earnings report that just sends the price down so much. And like I started the stream out with, I kind of want things to settle down a bit, and I'm fully aware that I might miss out on some opportunities, but I'm willing to wait a little bit just to protect the downside. So there's a new article today that has a sell rating, some comments from the report, like well-known issues, so nothing new according to this guy. So terrible guidance as well. So the thing is, I'm gonna move on from them quickly because I have them in tracker from before. I just pull them up on the chart, but when I see that they have lowered the guidance, it puts me off a bit, even if the chart looks cheap, because then it can very well just continue to drop. And one thing also to pay attention to is the last insider purchase was a long time ago, one year ago now, at almost $7, and today it trades below 1. So he has lost a lot of money, and you know, you would maybe expect some more insider to come in and buy some shares at this point if it's still attractive and they believe in it, and you don't see that. So no, I'm just moving on. The comment about the guidance put me off on this one, so I'm just gonna move on to GT. Which is Goodyear, you know, the tire company. I have tires from Goodyear. 1% from 52-week low, a little bit higher market cap, almost 3 billion, but that's okay with me. Yeah, based in Ohio, insider purchase in the last 6 months, which was from this guy Max Mitchell, which was a new purchase as well, at $12. So he's also a little bit down on that. They also had a massive drop today, 16%. So they trade below book value, and look at the cash generation. Operating cash flow is almost $5. And keep in mind then the share price, so that looks good, right, straight off the bat. But the free cash flow is around $1. They don't pay dividend, which was a bit surprising to me when I looked at them. They cut it here during pandemic, like after pandemic, which could have been a good decision. I don't know. I haven't followed them closely. Bad earnings, but a little bit up since last year. They have a sale this year. It looks like the company has been taking a few hits the last years, you know, up until Corona. They were doing, if you look at this period, maybe not that far back, but like in terms of a lot of the metrics that you like to see, you see in from 15 then. It looks good compared to the earlier years here, even if revenue is a bit down from there. You can see earnings, they're just generating positive earnings all the way, and this is also in the period where they could afford to pay a dividend or took that decision. Now they have cut it. Debt heavy though, so the sheet is diluting a lot. Right straight off the bat, if you put like around where it is now, $10, I don't think that is mispriced necessarily. But when you get these big drops, it gets a bit interesting just on the chart. But again, it's on earnings, so the sentiment is naturally bad right now. I'm assuming they are up in the aftermarket. And again, I just want to read like if there's they're a little bit down. If there has been some guidance comments. Why doesn't the executive team find an AI angle to promote? That's the recipe, right? I think I saw here, CEO warns of weak industry trends, which is again, I don't like this. Even if the chart, you can kind of argue that the chart looks good. When they come out with negative guidance, then it puts me off a bit. However, look at this. It seems to hold up like pretty well. If Dane were here now, he would use his gold color that he has learned, and he would draw a gold line. I don't know how to do that. So, but it seems to hold up very well here on this floor, right? So it could turn like just on technicals. But I'm fine with if I miss out on that. You also saw the upside, you know, not massive. So this would actually have to drop a little bit more before I get interested to enter, even if it trades close to the 52-week low now. And they kind of trade around tangible book value, which is what I said, like around $10 I think is fair here. But look at the depth. That's some heavy depth though. Accounts payable. I'm not gonna. Where is the? All right, this is more like it. This is the overview that I like. So they have a lot of things to take care of here. They have a revolver here. A bit complicated structure though. Anyone writing? Oh, the value invest. Is this you, Value Hunter? I see this guy in, a lot though. He writes a lot of articles. 20% down. He had a hold rating. Depth overhang, yeah. Well, yeah, because I saw the acquisition here. Elliott Management. So there's some activists involved here. Elliott. Well, anyways. I kind of like comments like this a bit. Like people who works in the industry and deal with these companies and stuff like that. I don't know that guy, so I don't know if it's true or not, you know. But I kind of it's something that I just like to take notice of. He's saying Goodyear keeps shooting themselves in the foot. In the pandemic, everyone was buying campers and trailer tires were sought after. They decided to stop manufacturing them and wanted to concentrate on all-terrain tires. I work at a G3X dealer franchise and couldn't find any trailer tires for a while. Multiple times in a good highway tire and popular size they won't have. It's like no one is keeping track of popular sizes and turn ratios. We also sell to the state and deal with national accounts. It's frustrating to say the least. So they are not impressed by management, is what I get from this article. I think I'm not gonna add them to the tracker just because of the guidance and the fundamentals. Also, it just seems like that you can justify the price at the the current price. I think I will move on to ECVT. So also 70% down today. Trades at almost $8, almost $1 billion in market cap. 6 in book value, 150 almost in tangible book. You have some cash generation here, which is positive free cash flow even, which is pretty good. But what is going on here? They have a massive dividend payout. Something is off here, obviously. Positive earnings, even growing earnings. They had a big asset sale here. Bought back shares. And they seem to, like, probably just interest, but they seem to pay off the debt a little bit slow here. You see constant 17 million in short term. It's a bit weird. 20% inside ownership. And the chart is now in new territory for the forever. It's an all-time low for them. I have to say though, like you're gonna see me say the same things on a lot of these. Like I want to, when you have these big drops on earnings, I want to see what management has said about the future outlook. Because if it looks ugly, then I don't discount that it can drop even further, which is a big thing to look at. No comments. So there's no transcript even. It's just this or what? The guidance is a little bit down, it seems like, in general. Yeah. And I wasn't crazy about fundamentals here, so this is a pass for me right now, and I'm not gonna add it to the tracker even. So I'm gonna go to MERC. Pass for me right now, and I'm not gonna add it to the tracker. Which is a paper company, I think. Also Canadian. 7.5% down today. Trades at $7. Tangible book. It's almost a tangible book. Negative operating cash flow. Negative free cash flow. So this year is bad. They do pay a dividend. Negative earnings. High debt. And it's growing even. They are taking on debt. Margins are down like we saw. Costs are a bit up on operating expense. Seems like a bad year for them, but they can probably also turn this around. So 40% inside ownership, it seems like. There are Kellogg is 34% owner. Billionaire. So that's noteworthy. And not a lot of comments on it. Not today, that's the only one. This is old. Same guy. Not sure about this. And they didn't have earnings yet, so this is just a general drop from today, which is noteworthy because if they also then miss on earnings, this can drop even further into new territory for the 52-week at least. So even if I would add these to the track, I would have to wait and see how the earnings goes. Was very little information. Maybe we should check like Twitter or something. Oh, this is just one. Seems like not a lot of people are following this, which sometimes I like. If he's a big owner, this Kellogg guy, that's noteworthy, you know. And the fundamentals doesn't look too bad, but at the same time, I think you can argue that this is it's not cheap right here. I would need it more cheap, I think, and I think it could drop even more. So I'm gonna move on this one, I think. I think I forgot the time now. The stream has been a bit long. I know I have like 1, 3, 7 tickers left. I said before, I knew I wasn't gonna be able to go through all. But I think I will do one more, and then we can end it there. And then I will save the rest of the tickers to Sunday, when Dane and I are going to stream together. And it's going to be on Sunday this weekend, and not Saturday. So follow us on X to get the time update on everything. I haven't spoken with him about the time yet. But for me, it's like well past midnight now, so I have to, even on my holiday, I have to go after this one. But the last one then will be CPSH, which is a tech company. A tiny market cap, trades at 160. Revenue is like a bit steady in the last 3 years, which is alright. A smaller company. It seems like they are in growth mode, you know, and if you look at these years, it doesn't look bad. They are safe. They have no debt. Positive earnings in all these years that I just highlighted. They are generating cash. Very little in capex. What are they doing? Sells advanced material solution to the transportation, automotive, energy, computing, internet, telecommunication, blah blah blah. Metal matrix composites that are a combination of metal and ceramic, such as base plates for various applications, including motor controllers used in electric trains. So they sell like parts. Also big ownership there, 33%. I just like to check that straight away and get it accurate, because sometimes my information is wrong. So they do actually own quite a bit here. This Bennett guy owns almost 10%. Have they purchased anything lately? Little bit here at 180. Yeah, so nothing like, huh? Is it not? Is there another Kellogg involved? This is not the same company. What is going on? Getting sick and tired of these Kellogg people. Anyways. Kellogg everywhere. Was he here too? Oh yeah, here. This guy. Alright. Doesn't matter. Book value 119. All cash conversion possible, but slightly. It's not a lot. They have 8 million cash. Which is not, well, it is high considering market cap, I guess. Steady years the last 3 years, but the question is, can this grow? Can this do something? You know, it needs to go somewhere. These years seems a bit similar. So what are they going to do to grow? Yeah, so Gold Panda has a strong sell, and now it's old though. Very old article. No one is talking about this company, it seems like. Comments are old also, I can't use them too much. I'm a bit put off by the tiny market cap, but the fundamentals doesn't look too bad. What worries me though is that it seems to be stagnated like a bit. Like earnings slowly decreasing. There's no, they don't take on debt, they don't do share buybacks, they don't generate enough cash. But slowly you can see this gonna, if they can find a way to grow. But so far I'm not sure. Again, I screen these on the chart, but also the fundamentals, and like these fundamentals, they are not bad, but it needs more, right? Actually, the chart looks a bit good. Near term. But it's too tiny, like I don't want to deal in this. Could be a mistake, but I just think it's a bit tiny. So yeah, I'm not gonna add this one to the tracker, I think. Okay, we didn't go through the rest of the tickers, but I'm gonna keep them, try them again on Sunday, and probably I'm gonna do them off stream as well and have some thoughts about them before we do the stream. But yeah, a lot of opportunities today. Big red day, big red week actually for a lot of things. Ugly earnings, ugly macro environment right now. So opportunities maybe. I've added some stuff to the tracker today. I found a lot of these interesting, even if I didn't add them on the tracker. But again, I find it a bit hard to navigate now in earnings season where everything's so bad, and I want them to settle down a bit and create like a floor on the chart and see where it goes. And then in the back of my head, I have the Q2 report from Alto. And maybe that sends the stock price down, and I want to put the cash into Alto again. So who knows? I just want to wait a little bit more. That's where I'm currently at. So, all right. Thanks for everyone dropping in. Thanks, Max, David, Value. Was it more people today? I don't think so. Thanks for using the chat. Thanks for everyone else who didn't use chat and tune in anyways. Really appreciate it. Sorry for that the stream was a bit long. I hope you got some value out of it. I added a couple of tickers to the tracker. I'm going to pay attention to them. I'm going to track them and see. I think there's a lot of opportunities now. I briefly pulled up the tickers. No, sorry, I didn't get time to do it. But I like them based on the, I'm talking about the ones I didn't go through today. I like them based on the chart and the metrics and market cap and all that stuff. So that's why I included them, but I didn't do proper research on them before the stream today. So maybe you want to do it on your own, but I think I will save them to Sunday and go through them then together with Dane. And yeah, it's going to be on Sunday this weekend. I don't know when. But keep an eye out on our X profile and we'll update you on the time and everything. Max, thank you. Yeah, thank you. Thanks. Great to see you in tuning in live again, Max. I hope you're doing well, and I hope you know, the investing is going great. I know you're building your sheet. Great job on that. Looked good. So yeah, all the best to everyone. Enjoy the rest of your week, and hopefully I see you back on Sunday then. All right. Thanks for following along. I will see you on Sunday. Bye bye.